So the bond market is in complete turmoil with bonds going absolutely bonkers and a crap ton of news coming out today. So good morning, ladies and gentlemen. Hope you're having a wonderful start to your week. Happy 4th of July week. And we start off the week continuing this crazy bond trend. We actually saw this starting on Friday of last week, where we basically saw the 30-year, 20-year, 10-year, 5-year yields all pushing higher, pushing bond prices down lower, where people basically said, hey, we're done with bonds. We don't want to hold them, or demanding a higher price to hold said debt. And that continued into Monday. We saw major turmoil out there in the bond market, and we actually didn't really cover this on the weekend deep dive, but the reverse repo actually had a pretty significant spike. We all went from roughly $400 billion all the way to $664 billion that subsequently went completely with the way of the dinosaur right back to 43. That influx of money went and said, nope, back to the bond market because things are not well, right? If we look at 30-year, 20-year as well, all having similar trends. If we go to shorter term yields, even 2-year going flat, as expected by the Federal Reserve, basically indicating, hey, we're not ready to cut yet, unlike the rest of the world, or the pity cut that we discussed from the ECB on the Weekend Deep Dive. Link down in the description below for the Weekend Deep Dive. And if you guys are interested, as you're down there, hit the subscribe button and have bell notifications enabled. It helps the channel out. And if you enjoy this content, throw a like on the video. Thank you all so much for that. So getting back to what we're going to be covering in today's video, we're going to talk about Bitcoin. We're going to talk about yields. We're going to be talking about oil. We're going to be talking about the market, an option play for the market that I'm going to cover in this video, and also just kind of a general thesis of what's happening with the market, some news events. And with that, let's start off with Wall Street sees president debate as a game changer. We have someone from JP Morgan. He's called Kelly. Basically said that he sees the Republicans sweeping in the election coming this year. And he says a lot of independents will stay home. That's why the Republicans will sweep. He also says he became more bearish on long-term U.S. bonds, which his reasoning for it, I don't necessarily agree with. And then I will get into what my reasoning is of why the bond market is doing what it is doing. And he basically goes on to talk about that we're going to get stagflation if the Republicans are elected, which may go in coinciding with Powell's epiphany to basically not be a team player. In that, again, we have multiple times discussed on this channel how Powell is a left-leaning politician, essentially, because he has political leanings. Everyone that kind of says that he doesn't is fooling themselves, and subsequently yields pushed higher. Now, let me talk about why I think yields actually pushed higher, and that's mainly due to the dollar being in this wedge pattern. We can basically draw the dollar pattern out for you guys, and you can do this on your own charts, right? We have the ascending line there, we have the descending line there, and we're just basically waiting for this to break out. We also covered on the Weekend Deep Dive, again, link down in the description below if you guys want to check it out, where we give you more of the levels, kind of everything detailed there. We saw that the Dixie is in this wedge pattern and Japan is freaking out. Why is Japan freaking out? Why is Japan even a relevant thing in this? And it's simply because, let me explain it to you how one of the YouTubers I watch explained this, and I think this is a very, very valid way of explaining it, because not a lot of people understand the dollar, right? You have dollars, but the Dixie doesn't compute as well. Think of this. I lent you Bitcoin, or you lend me Bitcoin at 3,000 a share, or a Bitcoin. And then subsequently, I go spend that Bitcoin, but I still owe you that X amount of Bitcoin. Now Bitcoin is 70,000, and I need to go buy it and then give it back to you. So that's the situation Japan is in with the dollar. They loaned against the dollar for essentially cheap. They got dollars for essentially cheapo. And then now the dollar index, which think of that Bitcoin, right, has gone crazy, right? So they loaned it down in this area right here when the dollar was 90 and now it's 105. So approximately from here to there, that is a 16% upside down on your loan, and subsequently you can't pay it back, especially with their economy, and they're trying to dump US bonds in response to basically trying to shove the dollar down, and it's not working. The yields essentially have told them to go sod right off, and the 30 years approaching 1970 pivot, which is not good in any way, shape, or form. And that basically puts Japan in a very bad spot. That's why I don't agree necessarily with the summation of this article or with this gentleman. He's from JP Morgan. They're pretty awesome. So again, all props to him about talking about this. I just have a difference of opinion. However, there is actually more turmoil going on where the French markets, and again, this channel is not necessarily political, guys. However, politics does affect the market, and we have to understand how this plays into the roles that we're going to be looking at during this week, and also the options play that we're going to be playing into. So we can see French market leaps amid hopes Le Pen will fall short of outright victory. If you guys have been living under a rock, Le Pen's party basically slaughtered Macron's, and they're praying that they don't have a seat change. Whatever side you fall politically on this, I really don't care, but the markets don't like sea changes. They don't like change. They like stability. They like the status quo. When you change the status quo, that creates turmoil, and when hopes of that not happening basically foster bullishness. So if we look at what happened to the market, right, this is where things get interesting. And we can simply see that the market did a whole lot of nothing today. But we did have one crucial piece of evidence that is going to further support the bullish thesis that is currently playing out in the market. Your sandwich right now on the post-market close, right around that 9-day moving average. You've been sitting at it very, very consistently, and you have defended the lows. We actually came down all the way to a key level today where we basically hammered it right at open at 1045. We got some data that we're going to go over in a second, and then we're going to go into the option play, but we're also going to jump over before that to Bitcoin and VIX and talk about it just briefly because I did promise you guys, and then oil as well. So bear with me for that option play. So looking at this, we basically bounced at the rotationary point. That is bullishness. We continue to push bullish, even though after market we are selling off, and that could be expected, which gives you a better opportunity. And you're hoping that it's red, that we don't break 542.44 today, and thus we keep rotating higher. If market gaps down tomorrow, it'd definitely be an excellent option play that we're going to be going over in just a moment. So make sure you guys stay tuned for that. We have to actually cover the NASDAQ first because that was more important as well. As we see here, NASDAQ broke below the key pivot point that we put on the chart, 478.14, and that's going to be the line in the sand for us as well, just to know, hey, is the NASDAQ turning bullish or bearish? When I saw this, I was actually in a bullish play. That kind of stopped me out. I did actually play the upside again once we bottomed and did make basically break even, so not too bad of a day. However, days like this are a chop fest, and it is risky to trade. One of the concerns I did have is the Russell, right? If we look at the Russell on a daily chart, we can clearly see that it is flowing outflows of bearishness. However, if we actually look at the fear and greed index, we are turning back towards neutral, meaning breath is coming back into the stock market, and thus I'm looking at this kind of tale of two tales where, okay, do I believe that we're going to continue in this trend downwards, or do I basically still put on the bullish hat and say, okay, this is still going to be bullish until we close below the key levels, right? And going back to those levels, regardless of what the Russell closes at, as long as the NASDAQ stays above 478.14, the S&P stays above 542.44, we have to be looking at this playing bullish. And one of the things I'm going to say is this is not necessarily a dead cat bounce. It's not necessarily even anything, right? The bears pushed us down lower, the bulls defended, and again, net speculative positions closing their positions, even with the data that we had today, which we're going to go over in just a second here, is ISM completely comes in horrible, right? Lower than expected across all of them. New orders were the only thing above green, and Atlanta Fed GDP now coming below 1.7, expected 2.2. So we're looking at this as like bearish, 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 bearish. And the worst thing you guys could do is literally green on the day. Like, come on. Like, I look at this and I'm like, explain to me where the bearishness is. Now, One thing I can actually explain to you what bearishness is Bitcoin, right? So we're talking about Bitcoin. Again, you're going to be seeing it red open here because I'm recording this at the time when Bitcoin is open at 7 o'clock the previous day. But Bitcoin actually had a nice bid today where it caught a bit, went up nice percentage on the day, actually closing nearly 6% up. However, to me, this is still validating that bear flag pattern because we really haven't invalidated until we trade above the 50-day moving average, which is currently sitting at 65,000. So let's say call it 65,000. Roughly, that invalidates, closes above that, and you stay above that. Congratulations, invalidate the bear flag pattern, and then we continue higher on Bitcoin. However, I suspect that you're most likely going to get rejected on this line, and you're going to see some bullishness. You're going to basically catch a dead cat right here and then send down lower all the way down to 50,000 on Bitcoin is my price expectation. 200-day moving average, strong support there. I do think you're going to blow through 56 on the way down and subsequently go lower. However, again, this is completely invalidated once we trade and close above 65,000 again. So keep your eyes on that, right? I'm saying that Bitcoin is bearish right now, but wait for that confirmation. And one of the things I basically said you had to wait for confirmation, and we got it today, was oil closing above 82, really 83, a solid close at $83.34. And that was just a massive win for oil. That pushes it more bullishness. Now, if it goes continuation mode and or just goes sideways, that will be bullish. This is confirmation versus what Bitcoin you're seeing is just speculation. At this point, you don't have an established trend to the downside or upside. I'm just giving you the scenarios. You really want to wait for stuff like this, which is confirmation, right? This confirms oil being bullish. Now, some unforeseen events can come in the future, right? Any black swan can drop in your lap and then it go lower. However, this is true confirmation. We want to be looking for stuff like this. And last but not least, let's go over what happened on the S&P and the option play that we're going to be going over today. So looking at the S&P right here, if we're looking, and again, stating the bullishness, I'm not going to give you guys a bearish opinion until we break 542.44. And thus is why I'm not actually going to be talking about the bear side for this option play. Pulling up the S&P, we can clearly see we're at a very low implied volatility. We're essentially at like the all-time low for the last essentially couple months. So we want to be looking at a debit spread. So with debit spreads, if we go here, we can clearly see we want to play sub 30 days. And really we want to be playing something with relatively low IV. So you're talking about maybe the 10 to 18 days. So you want to give it the trade about 2 weeks to 3 weeks to essentially work, but you want to constrain the time frame just because we need to be breaking those weekly highs consistently, and we're going to be targeting the weekly high again. So if we go back to what the market was saying, right, we can clearly see the weekly high is 550 again, similar to the lapse option play that we did. We can see that we want to be targeting 550. So let's say we go to July 19, has about a 11.4% implied volatility, but I like the 8.4 sitting on July 15th better. So we can clearly see 550 is within the expected move for this. So if we bought the 550 call and then sold the 551, that's approximately a max profit $63, and it is a debit spread, obviously, so $37 maximum risk. 2-to-1 risk to reward, almost there. I would like to spread it a little bit bigger, put a little bit more collateral on there, let's say $68, and have $132 spread. So that means at 150 it's 152, $1 more tick, and we can even actually lower this strike point here. However, by doing so, we do sway the profit metrics a little bit. I do like a little more liquidity sitting at this 550 mark that we have here. And again, not financial advice. This is just an option play that I'm putting out there for you guys so you can do your due diligence on it and take a look. As we can see here, we are short basically on a small time span here, and thus we really want to be a little bit wider, right? Maybe go to the 553, increases our profit margin, however, increases our risk as well. So debating between these 2 points right here, I would stick with the 552, 550 spread, $68 collateral, $132 profit, and the theta is only $2 per day. So maximum essentially loss to theta is going to be about $10 because that's where we're going to exit the trade saying, hey, this is not working out if the market doesn't start moving in our favor. Delta of $7 So essentially the market has to move one single dollar to wipe out all the theta that we would incur over this time frame. And if it starts moving in that direction, we're basically going to take profit at 50%. So we're looking essentially to close this position if it goes negative $30 and positive 60 to take profit roughly. That would be right at that 50% profit margin. And then that would give us a better risk to reward ratio. Now, if the position is going in your favor and you're able to monitor it, congratulations, you can milk more profit out of it. But on a conservative basis, always judge your trades on a conservative basis. This is what essentially I would do. And we can actually even go over to the NASDAQ to see something similar. Let's just jump to its chart again. Relatively low implied volatility, so we're still going to be doing that debit spread. Looking at this same day, July 15th, and we don't have the expected move for the NASDAQ, but again, we were talking about that same delta around. We can actually jump over to the NASDAQ to see what it was doing prior to this, and we can clearly see the breaking range for the NASDAQ is 486. So jumping back to the options positioning here, we can clearly see 486, same story here, sell the 486, buy the 488, and, or actually, sorry, the reverse of that, my apologies. Buy the 486, sell the 488, $78 debit with $122. Not too bad of a profit skew. I don't like the volume or the open interest for these contracts, so we have to see if those improve over time. So be conservative with this play. If you had to pick between the two, I'd definitely be looking at the S&P option rather than the NASDAQ option, just because that is more sound in my opinion. The S&P having a bounce off its rotationary point gives us a stronger point to get out, which would be if we break 542.44, you're losing approximately $30 at that point due to the delta move against you. Again, I keep saying, look at it from a 50% to 50% win to loss ratio. So take your max profit, max loss, divide by half, and set your profit targets around that. Subsequently, breaking 542.44 would mean that you're threading the gap fill, meaning this option essentially would go worthless and implied volatility would go up in your favor just because the market is coming down lower. So it would save you some value. That's why I'm saying to do a debit spread. But then again, VIX has been in basically a holding pattern right around this $12 mark. It's just done absolutely nothing. We're a little bit overdue for implied volatility spike. However, it's not a guarantee. The market does not have to give you what you want. And thus, looking at this pricing, I'm definitely going to be betting bullish on the market. Looking at VIX being super low, that's indicating bullishness for me. And thus, that's how I'm going to continue to play it until the evidence on the chart or the data shows. Otherwise, we do have Powell speaking tomorrow. So make sure you guys keep yourself peeled for that. Tomorrow, Powell is speaking and we get job openings. So keep those two things in mind before putting a position. Powell starts talking right at market open, so you'll be able to trade that entire time. And again, Wednesday is an early close, so keep your eyes on that. And I hope to see you guys in the next one. Thank you all so much for watching and hope you have a wonderful day.